Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, and you can see, guys, over the last couple days we have seen some devastation. So we had that run. I defined this for you last week where we were clearly caught between about 13,000 and 13,300. Told you that a little break below 13,000 would be a good opportunity to jump in. Now there was a gap that happened come Monday morning. Actually, there was a big move after Friday. I don't know, I can't remember exactly what we talked about in the last video, but when the job numbers came out last Friday, the futures just tanked hard. Now, that was Good Friday. The futures ran all night. They did not shut down until what would be 9:30 or so Eastern Time Friday morning. Then they closed and did not reopen again till Monday, or I'm sorry, Sunday afternoon. So, I knew late, I didn't look at it right away, but it was evident even on Friday that we had seen a big move in the markets based on the job numbers. Then there was a little bit of a pullback here, and then today a lot more devastation. 200 points to the downside. We haven't seen this in a long time. We haven't seen 1% pullbacks in a while, let alone 1.5%, and it was every market this time. This is like 2 days in a row. Things are really starting to change momentum, guys. This is what I've been harboring about and hammering on for the last umpteen weeks. And ultimately, umpteen months. And I'll be honest, I really thought this fall was going to happen a good month ago, 6 weeks ago, a long time ago. It was just all about patience, and waiting for this thing to resolve. And I did say, though, when it happens, it was going to be violent, and it was going to eat up a lot of ground fast. And now that is exactly what we saw. It has been really chewing away the acreage, guys. So, we're coming into earnings season. Alcoa reported well tonight, as did a few others. Maybe we do see some sort of a bounce. Could be just a bounce overnight. I don't know if it'll hold into tomorrow, but I'm going to tell you that things still don't look uber bullish right now. We've been looking at some really nice bullish moves, but things are starting to change. Momentum's starting to change. Tempers are starting to change within the markets itself, and you can see it written here as we just absolutely ate up acreage to the downside. On the Dow itself, we entered this area around 12.7, right back here about the middle of January. And now we're all the way back to it again, showing you the strength of the bears. When they decide to get going, they ate up 13.3 to 12.7. They ate up 600 points in about 5 days. Bye-bye. It doesn't take them long when they get going. So important that you can recognize these moves and prepare for them. I tried to give you the best I could below the 50-day or below 13,000. These type of things are good to look for, but I just can't stress enough how important it is in your trading to be able to recognize these and catch these and get these and take these short opportunities. The markets take the stairs on the way up and jump out the window on the way down. I've heard that analogy many times before, and it is so very true. Look at this. It took us months to get up into the 13.3 area and 5 days to get all the way back to 12.7. Recognize it, take it. There's good money to be made on those type of moves. Really good money to be made on those. Learn. Get yourself the education and learn how to recognize this type of stuff. It's so important. You really do yourself a favor. Either save yourself some money if you're bullish and you're long, or make yourself some money if you don't mind going short and playing the short side. So this can be very important to know this kind of stuff. And I'm going to tell you, look at the volume today. Yeah. There's nothing about this chart at this point that tells me to get mega bullish again. Not yet. Now, maybe we do see a bounce, and maybe earnings season does turn that around. But as it stands right now today, looking at this chart, I'm like, wow. On any kind of a bounce, I think I'm aiming more towards looking for some sort of short position here to kind of get myself back into that thing on the short side. So I'd tell you guys to be very cautious if you're a mega bear, if you're a perma bear, you could be in very good shape here. If you're a perma bull, where everything's always going up, you know it's going up. There's tons of money sitting on the sidelines. It's going to come in. Have you heard that before? You need to be cautious. You need to really be cautious. Look at the charts and listen to what the charts are telling you, and then take your trades accordingly. Here's the drop to the downside on the NASDAQ. Just a nice, steady, even drop. Could be here a double top. I shouldn't say could be, it is. This is a double top formation right here. We got a double top on the NDX, and it is winding its way down along with everything else. So even the NASDAQ, even the tech starting to show some weakness here. Apple had a fantastic run into the 644 mark today before slamming downwards to 630. So a big move today in Apple to the downside. Now it hasn't broken anything necessarily, but from a tech perspective, yeah, it's looking pretty tired here. So once again, got to be very, very cautious with any kind of trades that you take on any of the markets, whether especially like the Russells, which is getting destroyed right now, but the Nasdaq, the Dow, the SPX, any of those, you got to be very careful with those. Let the bears do their work here. I am a little bit, I gotta say, a disclaimer, I'm a little long going into the night. I've got some long on the future side of things. So I'm in a better position where I can kind of get in and get out in the middle of the night or whenever if I need to. You know, I'm not tied to my position. If I want to get out at 3 a.m. I can. But if you guys are looking at getting in the SPY, especially if you're options traders, you need to be very cautious about when you choose to go long or when you choose to go short, because that will make or break your account ultimately. So let the bears do what they're going to do and be cautious about any kind of bounces. Maybe we see something, as I said, tonight and into tomorrow based on the good earnings. That could very well transpire. But just be very cautious. Don't be quick to jump and try to say, "Oh, we're going up, we're going up, we're going up." Don't be too quick to do that. You don't want to get caught on that knife's edge as it then slices back down and the bears destroy you. They've been waiting a long time to get started, and now that they've got started, give them time to roar. Give them time to wear themselves out before you make any kind of major move. NDX daily, same thing. Gave you this little range up here that we were caught in below the 20-day. Pow. Today definitely broke the 2740, 2725, 2700, whatever. All areas to be watching to the short side. The next larger area now is this 50-day. If we can somehow spring back up, I would look for maybe a retest of the 20-day moving average, but as it is right now, very strong move, good volume. The internals completely confirmed what we saw today. It was just a really, really strong move overall by the Bulls. Bears. Weekly looking, first chink in the armor here too. Major chink in the armor here from a weekly perspective. So we'll wait and see where that finishes at the end of the week, but overall, that's that first chink. Here's the SPX. We were watching this for a while, little channel to the upside. Rest, boom, here we go. So 1395, the bigger area, guys, 1385 and 1380. This was the big area for the Bulls to hold, and you can see that when they couldn't hold this area, the Bears were like, well, bye-bye. And it went quick. Nothing but red candles all day long. Just didn't even come up for breath. So a very, very strong move yet again by the Bears themselves, pushing through and just slamming down into these lower areas. Some of them not even stopping for, just hot knife through butter, guys. So very, very strong move by the Bears today. Here it is below the 50-day. So the 20-day is gone, the 50-day is gone. Guess what? I could be targeting this lower area. If we see some heavier bearishness set in, I'm absolutely targeting that 1325-ish area. So I want you guys to be very, very conscious of that. If you don't have it in your charts, mark it so that you can watch it. And that's if the Bears continue their move. I'm watching that, I don't know, 1340 and then 1325-ish or so, something like that. You guys can mark that in your charts. But right now, yeah, just a cascade, just a waterfall drop here by the markets themselves. VIX, this is what I look for straight up. The fear is coming back to the markets. We close back above 20, so we'll see if we can hang there for another day or so. But as it is right now, very strong move by the Bulls and a very strong move by the Bears, pushing the bullish action up in the VIX itself. Back above 20, very, very starting to lend itself more towards that fear and out of the complacency mode, as we've talked about before. I like it back above 20. So we'll see if it can stick here and if it'll stay here, but it sure looks good right now. Looks like the markets are really starting to turn themselves in that respect. FAS on a 60-minute, we had this well defined here. I called 104 and 114. We saw a gap down below the 104 to retest the underside of this here, and then a drop from there. Very, very difficult to play this, so I certainly don't blame you if you didn't get any part of this. Would have been a very, very difficult trade. Going forward, though, you can see we've already broke. I should extend this blue line. We broke the blue line, which was basically the 50-day moving average, and this is continuing to bleed itself out right here. So watching carefully, maybe we can get back up into the 100 mark. But once again, I'll be looking for more shorting opportunities on any kind of a bounce to the upside. With that being said, FAZ very well defined between 20 and 2150. The gap here, the pullback, and the move back up. Once it got back above my subscribers, I had them. We missed the initial move above 2150, but I had them in today above 23. So we made some money on that. See if this thing will carry over into the next few days and watch this thing run. It looks good right now. I don't have a long or a short for you. Actually going forward, I don't really know what I could poke in here. I mean, if you want to try something up and over the 50-day moving average, maybe. But we've got some good, strong overhead resistance sitting there waiting for us to attack it. So I would be looking for some pause, break, stop, rest, whatever, up in that area. Be very, very, I just tell you to be, once again, just very cautious with that as we wait to see if this thing can reach the upper end of that channel. We haven't been there, geez, November was the last time we hit the top of that channel, so it's been a long time. That is ultimately my overhead target for this move. So I don't know what to tell you on the move. I would tell you to just wait, see if we can get a break. I do like it above the 50-day moving average. If you want to take a shot there, that's probably your best shot at this point. Otherwise, it's not until we probably get back above 26 or so. This is one that we're following this week anyway in the subscribers newsletter. Outside of that, though, I don't have any really good entries for you at this point. It's just a little too late. Kind of missed the move, I think, on that one. But the 50-day, that might be worth a shot. That takes us back to the beginning of the video, guys. And there you have it. Welcome to the world of the bears. And this could continue. I don't want to be the guy that's like, oh, hey, look, we've had bearish action the last 3 days, so, oh, we're definitely going to 300 on the SPX. I'm not going to be that guy. But I got to tell you that looking at the charts, based on what I see in front of me, I certainly do see some more bearish action ahead. I really do. So once again, we'll be looking for opportunities to get in and jump on and catch some of that as we close in on the end of the week and coming into next options expiration week next week. That could add a little bit more action to the market as well. So we'll be watching that very closely. But I will try to get back to you again on Thursday. Let's see what kind of action we get over the next couple of days. We've had a couple of really frantic days, volatile days to the downside. If we happen to kind of base sideways, consolidate here, it wouldn't surprise me in the least bit to see something like that happen. So we'll give it a couple more days. I'll try to be back with you again on Thursday. If you like these, I do a subscribers newsletter, $28 a month, buck a day. Definitely worth your time if you really want to learn how to read these charts and how do I draw my lines and where do I draw my lines and where do I get in and where do I get out and what's my profit target here and how do I figure all that out and how come you saw this and all this other stuff. Then take the mentoring. The mentoring is where it's at. Send me an email, send you more information on it. But it's time. There's never a when you invest in your future, when you invest in an education for your future, it's never a bad thing. It's always good to have an education in something, especially in this business. Too many people get in thinking it's going to be easy. We'll just go long this or short that. And for a while, you know what? That's been the case. Let me tell you, it's been real easy if you're an amateur to make money in the markets lately if you just go long. Just throw your money at anything long, and more than likely, it's been going up the last 3, 4, 5 months. But when things start to slow down, when things start to pull back, when things start to drop, then the question is, well, what do I do now? Where do I get out? Do I take a short? How do I short? I don't even know how to short. I don't even know what that means. But I hear you talk about it all the time. I want to know how to do that. It's all included in the mentoring. You don't have to come visit me. It's all done over the internet because technology is beautiful. It's very simple. We work on your time, so you don't have to take any days off of work. You don't have to take a weekend off if you don't want to, or a Monday off, or a Tuesday off, or whatever it might be. None of that is required. I work on your time. That's nights, weekends, 3 days a week, 5 days a week, 1 day a week, whatever it might be. So it's very well suited for the individual. So send me an email, let me know. We'll talk more about it. Hopefully we can get you in the course and get you going. Now's the time to do it. Let's get you guys ready for this stuff so that we can make some money on the downside as well as the upside when it does bounce. Okay, guys, see you again in a couple days. Bye.